Good evening, ladies and gentlemen. Clueless 8 again, and now we're going to go over the Nasdaq Composite. First, a longer-term chart, then a zoomed-in, shorter-term picture of what's going on out there. So again, the acceleration line here, on the Nasdaq from the starting point of November 2012, this is where we are. You can clearly see, first of all, keep it simple. Uptrend is very much intact. Uptrend doesn't get broken till about 4,300 on the Nasdaq Composite. We are currently at 4,500. You can clearly see here that the top end of the channel, which it eventually will get to at one point, is around 4,800, and we are pretty much here in the middle. So this type of consolidation is normal, and we are seeing that happen. We have strong support at the 50, which is around 44.64, and then at the 34 moving average, that's around 43.70 or 43.69. Obviously, these levels, if it does breaches the 50, you definitely want to be on the short side of the thing. That those are big drops in the market, especially on the Nasdaq momentum, high-tech side, technology side, and on the biotech side, and of course has to be respected. Shorter term, let's see what's going on here. Pattern symmetry again coming into play. This was the March to April move down. If that's what's getting played out here, then we are certainly going to come down to this level, and then build a base and start to move from here. However, if what we do see here is that before, nothing goes in a straight line down. So let me get this lines out. Let me zoom in. So this is the first stage of the move. We come down to we come down, we have a little bit of support here, it bounces up, then it fails again, goes to the 34, and then makes a big move up. So if that's the case, we're going to come down here, bounce a little bit, come down to the 34, and then make a big move up. Are the same pattern going to repeat itself? Absolutely not. But there's a very good probability, it's all a probabilities game, odds that that's exactly what's going to happen. Let's take a look at the shorter term 60-minute chart, and this is where we are. Looking at the internals, let me get all the drawings out here. Many different ways to skin the cat, so let's see what's going on. We are certainly quite oversold here. We could certainly go further down towards the minus 25 level, as we saw here. However, this one is now engaging the 200-day. Well, this is the 200-day line on the 60-minute chart. So it's possible, and these are all possibilities, that, and again, it looks like it almost closed this gap. So at this point, you could basically draw this. It's possible that we make a move up towards the retesting, and I've done this many times before, and you should know most of the times it does that. We make a move to check to retest the 50 and the 34 moving averages, and that's around 4,600 or so. These are quite oversold levels. However, you can get further oversold, but this is pretty much where we were here, and that happens to be in, let me get the lines out. Let's see if this is the February pattern. You can see here that we are pretty much, one second. Yeah, so we were, this is basically the July pattern. Looks like it's getting played out, so it looks like we could have a possible bounce. Again, what I said, a short-term bounce and then fall again, zigzag around, but let's see what happens. There's no way to tell. Things are moving way too fast. Alibaba's in the mix now, so that's kind of messing up the situation a little bit more with predictive forecasting, and I really can't tell exactly what's going to happen on a daily basis as we are entering that seasonal part of the year where we do have corrections, and of course these new IPO and stuff coming up. Let's take a look at the VIX. So the VIX is in a very interesting juncture here. If the VIX at this point climbs up over, let's say 14.5, then we're gonna make a big move up. Let's take a look at the 60-minute chart on the VIX. So this is where we are. If we fail here, then the VIX will basically retrace back down towards the 13. If we break out over 1434, 1440, and these are not absolute numbers, then it's very likely that we're going to head out towards the 16 level. Okay, so I'm just going to draw this out. If we break out over this level here, that means we're broken out of this kind of a bear flag, if you want to look at it that way. Then it's going to head up towards 16 and possibly test the 1750. If we do find resistance here, then the VIX will come down towards the 13 level and then attempt to make another move up. Just the way it works, okay? So let's keep the powder dry and monitor these proxies very well to understand the directional bias in the market. Let me put the RVX up here. Okay, here's a picture of the RVX. The RVX has broken out of this bear channel, you want to call it, bear flag channel, and at this point it's possible that if it moves up over the 1998 mark, that it's going to make a move towards 22. Which would drop the Russell 2000 hard, and the small caps would fall pretty hard. So let's see what happens. If it fails at this level here, like it did here, and like it did here, also at the 50% fib retracement level, all these numbers matter. 50% fib retracement is right here. And if it goes up here and fails, then it's very possible that it can come down and check the lower channel, which is 1725, in which case the corresponding market would rally on the other side. So I keep a very close eye on this for directional movement, and on a shorter term basis, it's likely that this 50% fib retracement is going to hold as resistance. So that's it. So that should give you a nice picture of what's happening in the overall markets, the bigger picture. Let's take a look at a couple of stocks and try to get a read on them. All right, in the next video.